Happy New Year everyone, as we start 2017 with a wrap up today of market trends for the end of last year, what's news in the current market and where we see things moving and going this year. Our role here at CBRE is not only help you transact your properties, but to also keep you well informed on the current marketplace and be your go-to people for help and all things property. On the 8th of February, the Brisbane CBRE Industrial team will be launching our summer auction campaign, earlier in the year and more industrial specific than our biannual group Going, Gone portfolio campaigns, because we have some great stock coming onto the market, vendors who want to see them transacted now rather than later, and we couldn't wait until mid-year to present them to you. Keep an eye out or get in contact with any of us to make sure we have all your contact details, know what you're exactly looking for and what your requirements are, and to ensure you get the info first. There are some crackers in there.
The CBRE in our Northern Industrial team have settled over $100 million in investment sales over the past quarter. Some notable transactions include the sale of 473 Newman Road Geebung for $24.5 million, 670 MacArthur Avenue Pinkenbar for just over $10 million, and the sale of several development sites in the Banyo Industrial Estate, which total $25 million in land settlement. Consumption and investment spending is supporting good demand in Sydney, Melbourne and Canberra, which suggests further improvements for Brisbane heading into 2017. The airport precinct continues to show positive rental growth results, with some major leasing transactions being completed by CBRE over the past 12 months. Rental rates have reached $150 a square metre in some cases within Eagle Farm and Banyo pockets, and with a shortage of good quality modern leasing stock, we feel this will continue to strengthen. There have been a take-up of over 100,000 square metres of industrial space by the CBRE Northern team in the last quarter of 2016.
Super prime yields have compressed a further 10 basis points in the December quarter 2016 to record lows. The industrial sector continues to operate at two speeds, with non-prime markets potentially having reached the bottom of the yield cycle, with buyers unwilling to compete and pay higher prices. This may be due to purchasers having trouble obtaining finance, with lenders tightening lending criteria on secondary assets. 473 Newman Road Geebung was sold in Q4 2016 on a 7% net yield, which is a prime, specialised, newly constructed warehouse facility with a 13-year WALE. 670 MacArthur Avenue Pinkenbar was transacted at a yield of 7.73%, which is a semi-modern prime industrial asset constructed in 2006 with a WALE of 3.53 years.
2016 was a successful year for the CBRE Industrial and Logistics team in the outer north market. Investment sales, land sales and leasing of prime industrial facilities continue to be the strongest performers. Industrial investments are still in high demand, particularly those with a WALE of 4 years plus. Through 2016, CBRE transacted a number of investments showing sub 7% return and even dipping below 6.5% return on occasion. CBRE expect the demand for industrial investments will only heighten through 2017, with industrial investments often being seen as safe havens of the commercial real estate world. Land sales were the most active sector of the industrial market through the outer north region. CBRE as a team transacted over 11 hectares of service industrial land through the outer north market. These sales were driven by developers and investors looking to deliver high quality speculative warehouses, of which the market is starved of. 2017 poses a strong year for leasing, with a gradual delivery of the upcoming speculative stock throughout the year. Whilst the Queensland economy is still not firing on all cylinders, it appears to be on the road to recovery. Business confidence is at a 7-year high, with perceptions of the economy now being in positive territory for the short and medium term. CBRE feel the uplift in confidence will only have a positive effect on the industrial market.
In 2016, we saw strong demand for the design and construct facilities in Brisbane's northern industrial market. CBRE completed transactions for OI Glass, Handrob, Pets and Couriers Please, with others under negotiation. Currently, there are a number of active large briefs in the market that should translate into significant take-up of existing stock and new design and construct facilities throughout 2017. The trend of flight to quality is likely to continue, placing additional pressure on secondary stock. This will translate into further downward pressure on effective rents of older existing product. With the occupier requirements becoming more sophisticated and intensive, CBRE expect the design and construct market to remain buoyant in the immediate future.
That concludes our early 2017 market update for you. On a final note, and on the topic of the state of play in the development finance space, I recently read an article written by Australia's #1 construction finance brokerage group, which mentioned that all 4 major banks are either closed for new-to-bank business or operating with significantly reduced appetite. Developers are no longer guaranteed an ability to borrow funds on the same terms they have become accustomed to, and are therefore needing to readjust their expectations as to what constitutes as appropriate finance cost. Does this mean less will be developed this year? Supply and availability of new stock to buy or lease will become tighter or more expensive, and therefore existing secondary stock more sought after? Only time will tell. We'll be sure to keep you informed on all that's happening and look forward to being of assistance throughout this year. Thank you for your continued business. Talk soon.